But I want to introduce next one of the co-organizers, co-founders of Seed New Mexico, who's been working in this space for a long time and is really thinking through and has been working on a proposal for a public bank to try to get to financing, not just access to capital that we heard about in the survey, but projects like this, right? For where how do we capitalize public dollars in a way that really affects local communities and local entrepreneurs. So I'm going to turn it over to Angela Merkert from the Alliance for Local Economic Prosperity. Go ahead, Angela.
Thank you, Eric, and welcome everyone. We're glad to see so many of you here today joining us for this symposium. Indeed, I want to share with you a bit about where we've talked about what is a sustainable economy, and a part of what's implied there is what's going to pay for helping us create this stable economy. AFLAP, the Alliance, has a mission to enhance the economic, social, and cultural health and well-being of our New Mexico communities. We want New Mexico revenue to be kept safe, local, and working for New Mexicans, not kept in all of the Wall Street banks. And what that means is when we talk about the health and well-being of New Mexico communities, we're talking about sustainable communities, businesses, and families who are meeting today's needs and are in balance with the future. And that implies environmental, sociocultural, and economic factors, as a number of former speakers have noted. Senator Hamlin mentioned the recent report issued by the Economic Development Department, the state's 20-year plan for economic development, and noted what some of the challenges were in that plan, including what I want to emphasize here, the lack of collaboration between economic development stakeholders and the lack of representation of, and this is a quote from the report, socioeconomically disadvantaged communities in planning activities that are actually related to those communities. We're feeling the beginning of the pinch now about, what comes next. The Federal Reserve has already noted that they're going to increase rates 4 times during 2022. So the very low interest rates are going to end. And we also have, I've heard the word stagflation twice this week, higher interest rates and slowing growth. So what does that mean for the state? Well, our recovery funds are ending. Fossil fuel dollars are going to diminish. At the same time, we have climate disruption, and we have public bank. By 2023, we could have the public bank in operation in support of developing or helping to sustain existing businesses or helping new businesses develop. We do know that we need more financial resources. Regarding how strong we feel the fire hose of funds coming into the state now really is through the recovery funds and through the additional revenue from fossil fuels this year. We still need, we need more and stronger lending programs, and we also need financing that will pay attention, better attention to small business development, rural and tribal development needs, and the potential that they have to develop on. Coming out of the climate change summit that the Speaker of the House held last year, there was a lot of inspiration toward creating new ways of addressing how we could adapt. That's going to mean that we need some funding for those ideas to support that creativity and help to help these businesses flourish. And that's not going to be traditional lending. The significant factors of a public bank that apply here for sustainable, equitable economic democracy include a democratically elected board that's also going to be representative of people who have been engaged in community development and the financing of that in the local communities. It's going to include the more flexible lending for small loans, longer term loans, and entrepreneurial lending that are not typically covered by community banks. Those are a couple of the significant factors here. There are more that go with that, but I want to help us move along. We want to enhance the state's finance system, and we want to get beyond what Economic Development Department and the NMFA and the Department of Agriculture do well, and that's through their lending programs or the pass-throughs that they have with federal funding. The difference between loan and a fund, a loan out of the bank and working with a fund, is that if we had, for instance, $50 million in capitalization for the bank, wouldn't it be wonderful if that grew into 500 million without another appropriation from the state? Well, that's what's possible with the bank. Because it is a bank, it can create what we've looked at as a span of 8 to 11 times, actually, based on the Federal Reserve regulations lately. It could leverage that 50 million up to 11 times. And that is significant. That's significant increase in financial lending capability for the state. It's like investing in our businesses, our people, to make this work. Just a couple of other points to make on that. The bank would not be competing with community banks or credit unions. It would actually be a partner with. So the borrowers would come, you would enter through the community bank, credit union, or the CDFI to apply for the loan, but the loan would actually be created based on the needs identified in the state, with input from the legislature, recommendations from the legislature, as well as recommendations coming from communities to create the loan programs that are actually developed and accessed. The bank, the state public bank, is a nonprofit, and so it would be able to loan at and engage in lending at lower interest rates than a community bank or credit union could standing alone. And guiding principles for the bank that AFLAP has identified include equity, access to that lending in an equitable way, and democratic board governance. Based on the 2019 GDP figures, we have an indication that there's a $145 million capacity for New Mexico lending demand that is unfunded during that year. So that's a huge chunk of possible business. The last thing I'd like to mention, key findings in the business plan that we've developed, that was developed over a period of a year plus with UNM finance professor and members of credit union association and credit union leaders and community bankers. The bank is profitable in the second year. It can assume more risk and still be profitable. So it can take on these atypical loans that the banks don't like to take. And in the first 7 years, at no additional cost to the state, the equity or capital increases from 50 million to 113 million. That creates a lending capacity of almost $1 billion. And wouldn't that be, that would be a real gift to be able to have that available and be able to continue supporting economic development and not be going into our peaks and valleys as we have tended to do if we had the bank to stabilize what's happening in economic development and truly engage in sustainable work. I just want to highlight language from the proposed legislation that's being introduced for this session to create the bank. The bank shall pursue a policy of developing loan programs for public benefit to further agriculture, commerce, and industry. And it goes on from there. But the point is, the focus is keeping New Mexico revenue local and keeping it in circulation in support of New Mexicans. I'll be available to answer questions later after the other presentations. And thank you for being here again. We really appreciate this. It's been great fun actually to pull this symposium together for today.